I think, look, to me, it's kind of ironic because Kevin Warsh strikes me as someone that could have been nominated if Mitt Romney were president. He's sort of like an establishment Bush GOP flunky that currently works at a think tank named for a president that presided over the Great Depression.
This is Neil's therapy. Our healthcare didn't cover therapy, so we just did this instead.
Because he's always so happy on Fridays. Maybe we should do it Friday afternoon over some cocktails.
RenMac Off Script originated as a weekly internal research meeting designed to summarize and discuss what happened in Washington, the markets, and the economic data over the past week. It was always intended to be and remains a free-flowing conversation with no discernible objective other than to extract the wisdom and opinion of our analysts and their expertise. This is a conversation among colleagues. Individual circumstances are unique and nuanced. Do not mistake these conversations for investment advice because it's not. Here we go.
All right, welcome to RenMac Off Script, where we openly discuss markets, economics, policy, history, and life. It is Friday, January 30th, 2026. I'm Steve Duttenhofer.
I'm Jeff DeGraff.
I'm depressed. I'm Neil Detta.
And I'm Steve Powell.
As I say, what is the funeral garb for a male? I don't even actually know what the custom is. I know the women wear those black things over their faces, but
Well, in my culture, I think typically we wear white to funerals.
New Jersey?
Is that right?
No, Indian culture.
Thanks.
Is that true?
Oh.
Yeah, I think that we don't wear black. Yeah.
Yeah. All right.
There you go. We'll get.
Learn
I gotta
something
Kind of
do it.
ironic when you wear white to a wedding now, isn't it?
Well,
So before we get there, weird segue, but before we get there, shout out to our colleague Eric Boucher for a repeat win as the chili cook-off in South Jersey, the no-bean chili down in Spring Lake. So kudos to him. We should put that in the show notes, his chili recipe.
his recipe, does he just steal from the New York Times? So
He
I don't
does.
think it's like a lot.
No.
Like, what's your secret? The Sunday section of the New York Times?
Well, you get the recipe of chili right before the Super Bowl. Speaking of which, did you guys know that Sam Darnold's, the quarterback for the Seahawks, his grandfather was the Marlboro Man?
No,
I actually
did
did know that. But when they beat Penn
that?
State, I was subjected to that.
Yeah, weird.
Speaking of the Super Bowl, I mean, this is like the one time when Giants fans and Pats fans are united in their disgust for the Hall of Fame induction, right? Did you guys see that? Bill Belichick passed over.
Yeah.
And Eli Manning also.
Oh, is that right? Yeah, that's
Yeah.
sad.
Both of those are a little.
There's
little
nothing
weird.
controversial about Eli Manning. He's like the nicest guy on the planet.
Well,
And
two-time
he's
Super
successful.
Bowl MVP. I mean,
Yes, right.
the David against the Tom Brady Goliath. I mean, come on.
Yeah.
Election
that's a weird
fraud.
one.
Election fraud. That's what I see.
All right, Neil, let's tell the listeners and the viewers out there why you're so depressed if they haven't figured it out yet. It's not because Bill Belichick didn't get into the Hall of Fame on the first ballot, I'll tell you that.
Let's put the timer up, though. You've got 3 minutes. It's like the Supreme Court to argue your case. You've got 3 minutes.
true.
Go.
That's you, Neil.
That's more time than I give my wife sometimes. Look. In these positions, I've always said it pays to have someone with an open mind, right? So people are going to be wrong.
Hey, Neil, I'm going to interrupt you for a second, just to set the table. So Warsh looks like he is the odds-on favorite now to be the Fed chair. Now go.
Yeah, Warsh is the odds-on favorite to be the Fed chair. Look, I would just say that it's important to keep an open mind when in these positions. The issue with Kevin Warsh, I think, as we were kind of talking about, Jeff and I last week, is Warsh isn't that guy. I mean, when he's been wrong, he's always been wrong in the same direction, which is hawkish. And expecting someone like him, who's always been hawkish, to come in now and make the dovish argument to kind of engineer rate cuts as the president wants, I think to me is a bit of a leap. So it raises the question and some suspicion as to like how he was able to get this role. Quite an about face. Similarly, I mean, throughout his career, he's always been the person to make the argument that Fed policy has sort of enabled fiscal irresponsibility. I've had my doubts about that. I mean, the reason why interest rates were low in the 2010s was because the government was running relatively tight policy after the financial crisis. So the Fed wasn't enabling anything in that regard. It was more of a consequence of what the government was doing. But does anyone think that federal government is more responsible because interest rates have gone up? We're still running massive budget deficits. And I also think it's kind of fascinating that he's about to work for someone. Well, he's going to the Fed, but he's being nominated by someone who's been tying interest rates to sovereign credit risk, right? Like, so you listen to Trump talk about rates, he talks about it like you would if you were a household. Like, I deserve low rates. I have an 800 FICO score. That's not exactly how it works, but yet he's going to work for someone that believes just that. So I find it fascinating. Look, I mean, Trump had a wide range of potentials, and I've long believed Warsh to be the worst of the lot. But it's important to remember that in the scheme of things right now, it's not a particularly big deal. I mean, in the sense that the Fed is more than one person. I don't think it's good for the markets, but I also think we'll probably find that out later if something bad happens. I don't think Warsh is the guy that's going to be going in there to kind of break heads. He doesn't have much experience like running an institution that large. And he didn't really serve with distinction when he was there. He has earned, admittedly, a lot of plaudits from very serious people who I personally don't think are that serious, like Mark Carney, Prime Minister of Canada. Like, you want him as an endorsement? Okay. So, yeah. I mean, I think, look, to me, it's kind of ironic because Kevin Warsh strikes me as someone that could have been nominated if Mitt Romney were president. He's like sort of like an establishment Bush GOP flunky that currently works at a think tank named for a president that presided over the Great Depression.
Wow. Okay.
Did I say anything that was factually incorrect?
Drop.
No, but
Condoleezza Rice came out and supported him. Shocking. Another Bush flunky. Mark Carney.
Wow.
Mark Carney came out and supported him. I mean, look.
But wouldn't we just, and I don't want to belabor this, so I want to move on for a second, but wouldn't in the financial markets, we applaud somebody who's going to come in and be an inflation hawk? Like, isn't that how we're supposed to be thinking?
I mean, look, if inflation is, to me, it's about the ability to persuade. Do you want some, okay, but the other thing is, the president has made very clear that he wants someone that believes in cutting interest rates. Is that an inflation hawk?
No,
so it sort of begs the question as to what Warsh, it makes him look suspect. That's all. And I'm sure he's going to look suspicious to the people that he's going to be serving with when he gets into that role. As I've said before, like, Warsh has not ever been able to articulate the dovish thesis and persuade someone to his side. So what makes you think he's going to be able to do that now?
So I would just say, if anybody's worried about, the RenMac panel being sycophants, I think this just, rolled the grenade into that foxhole.
And look, we've been advocates for Secretary Bessent, like, so we
totally.
I mean, it's I was
at times supportive of DJT,
and at times supportive of DJT, and at times not. But I would just say, this fellow is the antithesis of the populist movement that swept the president into office. And I've long believed, like, one of Trump's strengths has been his ability to kind of moderate the Republican views on economics, right? Whether that's trade, immigration, social insurance, and the Fed, frankly. I mean, we know Trump isn't there was a time when, right-wing, Republican politicians believed that the Fed should only exclusively have a price stability mandate. I mean, I think Paul Ryan believed in that, right? Former VP of the Republican ticket nominee, former Speaker of the House. Trump doesn't believe that. Trump doesn't believe in them having solely an inflation mandate. So, like I said, I mean, this is someone that could have been picked by Mitt Romney or Paul Ryan. Not exactly today's modern Republican Party.
So what's the, Steve, what's the timeline on this now? Because we're getting some indications from Tillis, right, that there's, he's got a sequence that he wants to go through before they do the confirmation process. Is that right?
That's correct. So according to this Friday, it's worth noting that Stephen Miron, Fed governor, his term expires tomorrow. And that might have had something to do with why they decided to roll this out today, because presumably they will use that Miron seat to put Warsh in and then elevate them to the chair position. In terms of the confirmation process, Senator Tillis, Republican senator from North Carolina, one who is retiring this year, and I think that's important for him to actually, in his now starting to stand up against Trump, well, he's not going to face any electoral consequences to doing that. So he has said that he will not allow the confirmation process to proceed there on the banking committee, of which he's a member, until the Justice Department resolves its investigation into Fed chair and the cost overruns with some of the facilities. And I believe Tillis came out today and said Warsh's nomination has not changed his position. So how does this play out? My guess is, remember, there hasn't been an indictment. There probably will be some communication to Powell that we won't indict you, provided that you probably step down after your term as chair expires in May, even though you can remain as governor until January 2028. So maybe that sort of unlocks the confirmation process there. Once Warsh goes up there, based on what we know, I don't anticipate any confirmation problems. I guess the one thing that I would, raise is just, there was this idea before that had Bessent been nominated to the Fed chair, there was talk of, would he sort of select the replacement there at Treasury and sort of be the puppet master? I sort of wonder, is it possible that you might see the situation reversed now where Bessent remains at Treasury, and does he, given the relationship with Warsh, have more influence over there? Obviously, you've seen sort of a blending of the Treasury and Fed going back to, not as far back as Biden nominating former Fed chair Janet Yellen to the position of Treasury Secretary. And so again, that sort of blending of the relationship there, I think, is going to be important to watch moving forward if that trend continues.
And Jeff, did we see anything in the markets, pre-equity open, to suggest, anti-Warsh or pro-Warsh or the dollar debasement or anything?
Well, look, I think it's what you're seeing is a reaction in the precious metals. You're seeing a little bit of a reaction in equities, but the precious metals is the is the big one. And I would say, I would say one thing on Warsh. Just it might not be known out there, and so I'll say it. Warsh and Scott Bessent have something in common, which is they are the proteges in a way of Stan Druckenmiller. And, Stan, who's obviously been highly successful in this business, has always been a deficit hawk and more of a monetary hawk as well. So they're aligned there. So I think there's some familiarity there. And Secretary Bessent and Kevin obviously know each other and are comfortable with each other and, have communicated for 25 years probably now. So that's, this is not a new relationship, and there might be some familiarity there that makes that more comfortable for both of them, and maybe the president as well. So we'll see how that plays out. But I would say, and I think as much as anything, this speaks to the dangers of parabolic moves, and we've warned about the parabolic move in gold and particularly in silver. And believe me, I know the listeners are going to be like, well, of course they do. How else do you do it? People want to know the reason as to why things are going to happen, right? So why is gold, in fact, I was on CNBC exactly a week ago, and I said, look, you got to be prepared that gold could have a 50% pullback in 6 months. And Scott Wapner's like, well, what's the reason? I can't, and it's not so important, the reason. And I know that sounds crazy. But think of it this way. These are loaded weapons. When you get into these parabolic moves, these are loaded weapons with hair triggers. And it doesn't take much to change the perception because there's just not enough liquidity on the other side of the trade to absorb it. And that's the problem with parabolic moves. So, is it, you predicted Warsh versus, the yen strengthening or something else, Iran attack or whatever? It doesn't matter. That's not really the point. The point is when you get into these parabolic moves, you're susceptible to the littlest things that can just change the influence of the psychology. And that's really what's important. People spend way too much time trying to determine what it's going to be. It's like trying to unravel the mysteries of the Bible, right? I mean, it's been going on for centuries, and nobody's really come to the conclusion yet. And I don't know if there is a conclusion. And it's the same thing with these precious metals, but specifically not gold or silver, but with parabolic moves. Parabolic moves have hair triggers, and those hair triggers can go off at any point in time. And that's why they're so dangerous and so susceptible to these Vs, because they're these mass changes in psychology. They really have nothing to do with the fundamentals. They have certainly nothing to do with free cash flow. And we can talk about debasement and what does this mean out the next 10 years. That's fine. We can talk about that with semiconductors. That's fine. But in the here and now, the narrative gets driven by price, and that assuredness, that cocksuredness, you might say, usually as a result of those spectacular gains. And look, there's a whole line of crypto bros, if you will, that are shaking off bankruptcy because they were cocksure themselves as crypto was going up and levered to do it. And lo and behold, the bottom came out, and it has nothing to do with is crypto legitimate or not legitimate, and where's it going? Like between here and there. Between here and the future, markets will extract their toll, and that's exactly what's happening here. So I think the Warsh thing, look, we talked about, Neil and I talked about this morning. Is Warsh going to influence the Fed between here and May, and somehow that's bad for gold? No, but it's the perception. That's all it is. It has to do with the perception and these parabolic moves. And that's why we are so attuned to identifying parabolic moves, because we understand the circumstances around that and the vulnerability that they present to investors. So, you're lucky to leave some of these things with a first-degree burn. Most people leave with third-degree burns. It's just a matter of how much of their body's covered in them.
And adding to that, I think as part of it is the sentiment that we're seeing in silver, right? I mean, you've got sentiment at extremes for silver.
Yeah, you had the highest consensus Inc. That's a survey, so we'll see. But I mean, it's it's kind of interesting. Yeah, it's the highest consensus Inc. bulls you've seen since 1998, when the silver price was, wait for it, the silver price was $7.50, and it had this same number of bulls. And here we are in silver at this morning, 101 here pre-open. Got to as high as 120 when that was that survey was taken. So whatever that is, 10x, it's more than that, right? 15x, whatever the case may be. So the price doesn't matter; it's how you get there that matters, and that's what drives the psychology.
Right. And you mentioned, the Japanese yen. Is there a coordinated effort, this is for all three of you guys, to get the dollar lower? Are we making moves in the Japanese yen?
I want to Neil to touch on this, because this weak dollar policy is, it feels like a bit of a chess match, and we're putting a pawn out there. Because I'm struggling to see how this squares. If you want inflation down, you do not want a weak dollar. So I don't know if it's, fight fire with fire, if it's the beggar thy neighbor policies, which obviously Secretary Bessent has warned the Japanese about. You can have tariffs all day long, but if you're going to just weaken your currency, that's just, you're kind of poking us in the eye on that stuff. But what do you make of that, Neil, on the Trump's recent commentary on the weak dollar is good? Clearly, it's good for growth. There's no doubt about that. But right here, it looks and feels like we need to get the inflation down before we can really worry about the growth. How do you think?
I mean, sometimes Trump says incongruent things. I want home prices. I want there to be more affordability in housing. I want home prices to stay high. I'm a low interest rate person, unless you're a saver, in which I love high interest rates for you. So, this is like what's going on in the currency market is just another part and parcel of that. I mean, Trump is a low FX, a weak dollar guy for U.S. exporters. He's a strong dollar guy for consumers. How's that?
Yeah.
I would just say, the movement in yen is interesting. Because a lot of people are talking about how the rise in Japanese government bond yields is relatively benign and reflecting of a strong economy, which sort of begs the question as to why the currency isn't strengthening as well on its own. That to me is notable. But I would just say, to me, like it's the dollar smile, right? I mean, the dollar weakening is primarily a function of risk-on sentiment in the capital markets. People are rotating out of the U.S. dollar and chasing higher returning assets. That's how I more or less think about it. I don't like this notion that that we're debasing the dollar or the reserve status has been dented and that's what gold is reflecting. I don't really buy into that at all. I think it's mostly a reflection of the fact that we have generally a global bull market, and what do you expect should happen in a global bull market? The dollar should weaken in that environment.
Yeah, the good news around that too, right, is that bond yields are certainly not suggestive here in the States anyway. They're not suggestive of that scenario of capital flight and a punitive sell America type of sentiment that's out there. So yeah, I would agree. The energy trade's interesting because that has started to pick up, and obviously that is a corollary to a weak dollar. It hasn't officially turned bullish on. I mean, I don't know if I've ever been in a position where I've been bullish on something that hasn't officially turned bullish in all of our work as I am on energy, because you can kind of see it building. Exxon broke out, Chevron broke out, Marathon hasn't broken out yet, but you see Schlumberger and Baker Hughes and the like. So you can just kind of see it building one by one as these things improve. And that's been happening globally. It's been happening in China. It's been happening in Japan. Actually, it started in Japan, which, again, going to kind of the debasement trade, if you will, with the idea that, whatever you hold in reserves in the ground is going to have value regardless of whatever the cross of the yen is at any given point in time. There'll be kind of a global market for that. And it's been happening in Europe as well. So I think there's this interesting breakout that is starting to take place in energy that we're certainly leaning into as it moves.
You might not know it, but RenMac has a free newsletter where we provide many of the charts we're discussing on today's pod. Go to the link in the show notes and subscribe. It's quick, free, and insightful. Now back to the show.
So since we're on the topic of global markets, seems like there were some developments on the trade front this past week, Steve. USMCA. By the way, how many trade deals that we announced actually have been ratified and closed by other countries? Like 2?
Not as many as you would think. And I think that's sort of where you're probably alluding to this is, earlier this week, President Trump said he was going to revert back to the 25% tariff level on imports from Korea. And I think the thing to remember is that, even though that agreement was announced, the Korean legislature hadn't ratified it. That's sort of what Trump stated his reason was. And I think that's important because, to your point, Steve, a lot of these agreements have not been ratified by other countries or trading partners in their parliament. I know that's still the case with Europe. I think Trump wanted to send the signal to them to hurry up and get these things done. The thing to watch is, how is Korea going to respond? Because the earliest we may get this ruling here with Trump's ability to use the IEEPA tariff authority is now February 20th. And that's important because that's the authority that Trump has used to impose this tariff. And if the court rules, as the betting markets suggest, against Trump's ability to do that, then he will likely pivot to other authorities. But the authority that he would probably most likely use here for the IEEPA reciprocal tariffs, the ones that vary by country, is Section 122. And that limits the amount he can impose up to 15%. So is that going to cause, some of these other countries sort of delay things? I think that's important because a lot of these agreements also included foreign direct investment, and they haven't been provided yet. That investment's not going to be flowing yet. They also included a lot of expanded access for U.S. Companies and opportunities. Again, if they're not ratified, I don't know that that's happened yet. So when you talk about the administration's goal here of trying to grow the economy, particularly in the first quarter of this year, to try to influence the midterm elections in November, I think that's, again, part of their goals here. And when they're not moving in the right direction, they could have some political consequences as well.
So they're, in the case of South Korea, they're dragging their feet based on what they're seeing as a potential outcome in the Supreme Court here in the U.S.
I don't know that it's the sole reason. I mean, I don't know. I'm not a Korean political expert, so I don't know all the legislative reasons. But I'm just pointing out that, at this point, hey, there may be some sort of what's our hurry here if the court may decide to actually rule in our favor. Now, again, I think that's probably foolish because at best you may end up getting a 15% tariff, and Trump may sort of pivot to, again, some of these other authorities. Maybe they're more sort of these sectoral tariffs sort of targeted there. There are a lot of things he could do. Maybe he's going to slap Korea on the currency list. I don't know. So again, I would advise them probably not to go down that road, but it could be part of their calculus.
But just for our listeners here, so the talking about these sequences, right? If the Supreme Court comes back and says, no, you can't do this, then does he have to go out and renegotiate those deals that he thinks he already has with other countries so that they can ratify whatever is on their plate?
Well, it depends on the other countries. Right now, you've reached this agreement. Now, if another country or trading partner could come to and say, well, look, the authority that you used here is no longer valid, therefore we're going to walk away. I think that's where Trump and United States Trade Representative Jameson Greer have been very clear as to saying, well, we have other authorities. This is coming either way, so it's in your best interest to honor these things because the deal will only get worse for you if you want to go down that path. I think to your point, too, when watching what the court's going to do, why are they taking so long if the decision was going to be that easy? Probably two reasons for that, potentially. One is, probably more nuance here. Nuance would probably be more in the direction of the Trump administration. Two, I think from the perspective of Supreme Court Justice John Roberts, speculation on my part, I don't think he wants to have a narrow 5-4 decision. I think he wants something broader, maybe 6-3, maybe even 7-2. And to get that, again, that's where I think that nuance comes in. And then look, I think one of the things the courts could do is kick this decision on how the refunds would work back to the lower courts, and that could drag this on. And if you have this expectation built in that these refunds were going to come back to some of these impacted companies pretty quickly, i.e. beginning of this year, then that might not be the case. So a lot still riding on this eventual decision.
All right, so trade is still on the agenda. Let's move to the mailbag. Harry, good morning. I'd remind everybody, as I always do, that if you submit questions and we use it on this pod, we'll send you a nice RenMac trucker hat. We are starting to run low on those, so get those questions in. But thanks, everybody, for submitting those questions. Harry, to you.
Okay, good morning. Today we have the question come from Sean Snyder. His question is, what is causing Atlanta Fed to trade above 5%? Clearly, it is because of narrower trade deficit. But what is causing the boost? Gold exports, other metals like silver. That's it. Thank you.
Thanks, Harry. Neil, I think that one's for you. Why is the Atlanta Fed, got a number that's a lot higher than both you and the real Fed?
Yeah, well, the gold thing, I think they adjusted for that. So there had been this weird thing where they were like including gold exports, and it kind of juiced the numbers one way or the up a lot. I think they adjusted for that. But at any rate, it's not tracking over 5% anymore. It's come down quite a bit because of the trade, wider than expected trade deficit in November. But it's important to know that one of the flaws, I think, in the GDPNow is that it basically sort of like levels. There's like a momentum component to it, right? Like, so if the previous quarter was strong, then it kind of kickstarts the next quarter at a very, very high level. So that's one thing. But it's bobbing up and it's bobbing around a lot these days because of what's going on with trade. When you look at just sort of private domestic demand, it's more or less unchanged. It doesn't exactly show like a massive boom in the economy. But look, this is like, but even regardless of what the Atlanta Fed GDP tracking number is showing, there's been a meaningful disconnect between sort of expenditure side tracking estimates of GDP and employment. Now, obviously the residual is like, people are just going to say that's a function of stronger productivity growth. I have some doubts about whether that's actually, we're in a productivity boom right now. It doesn't mean that we can't be in one later. But a lot of the growth is a function of a decline in the savings rate, and there's a limit to how much consumers can draw down their savings to finance consumption. So even if the savings rate stabilizes, for example, this year, then consumer spending will naturally slow down towards where income growth is. But to answer the question, it's primarily just like swing factors around trade and inventories that's kind of juicing the Atlanta Fed. And we had a wider than expected trade number, and that took a percentage point off the GDPNow estimate, and we're back into the low fours.
Got it. Thank you, Sean, for that question. We'll get you a hat. Those questions submissions can be found on our LinkedIn and X accounts. We got new pictures for that, by the way. We're using some older pictures of the hats. We got some new
There's
pictures.
a lot of really good questions, so keep them coming, guys. I mean, just because, and gals, just because you don't get it used doesn't mean it's not good. In fact, some of them might be so good that they're over kind of the broader audience's head, so that becomes something that we have to consider. But keep them up; they're great. And by the way, we had some video submissions prior, right, and some audio submissions, which are fantastic. So all mediums welcome here.
Yeah, we'd like to get some more videos out there. That'd be good. Keep them coming. But yeah, Sean, we'll get you a hat. Jeff, what are you seeing in some of the sectors? I saw that utilities has officially turned negative in our work, right? The broad-based. I know you had a report out this week to our clients about semis versus software and the momentum we're seeing there and potential for reversion trade. Anything else that's sort of like popping up on your screen from a sector perspective or subsector industry?
Yeah, this comes out later, so I'll happy to talk about it because we certainly want our clients to get that data first, which is the spread between in momentum, and we have a unique way of measuring momentum, so it's not just outright return, but it's better. And if you look at momentum in tech only, right? So the tech sector, high momentum names versus low momentum names, the top 20th percentile versus the bottom 20th percentile of momentum. That spread in performance is in the 96th percentile historically, which says that, this is better than 96% of the time that you've seen that spread over a 65-day period going back about 26, 27 years now. And look, we're unapologetic momentum players. Momentum trends are the lifeblood to longevity in this business. Fighting those trends is foolish, no matter what your narrative is, or at least if you're going to fight it small and then build to it once the trends establish themselves. But we will fight trends and we'll fight momentum when we have those momentum extremes because that's highly susceptible to reversion. So we're in that now for tech, and it just crawled in there at the beginning of this week, and then with the weakness and the deep oversold condition in software yesterday, which are the lower momentum names within tech, really got to an extreme. So, to us, this is a point where you want to take off that exposure to momentum, that, you want to make sure that you're not overly concentrated in the high momentum names and, deficiently underweight in the low momentum names, because it's highly mean reverting environment for those. So just be careful of that. And we sent that out to clients earlier this week, and then it really kind of established itself yesterday with the crack in Microsoft, and obviously that took down, I think 13% of software names yesterday have what we call negative volatility alerts in a deep oversold condition, easily the deepest oversold condition that we've had in that group since Liberation Day. Back in the spring of last year. So, this is a deep oversold condition that's set up to bounce, doesn't have to change trend. In fact, I don't think it will, because I think those trends are pretty well established and they're negative. They just look a little extreme here. You mentioned that utilities rolled over. That is true. They have rolled over. Energy hasn't officially broken out yet, but I think that's kind of that swap between those two that we're seeing a little bit of here. Maybe the biggest, I don't know if it's a head scratcher or just certainly something that we're watching, because it preferably would not be happening here, is this softening of equal weight. You have to do it equal weight consumer discretionary versus equal weight staples. Obviously, if the economy is humming along, you'd expect discretionary, which is more cyclical, to be outperforming staples, which is more defensive. That's been the case up until basically the beginning of this year, and now we've seen a pretty good contraction in that. Some of that could just be tax loss selling and that relief bid that the losers get, which in this case would be staples, at the beginning of the year. So we'll be attuned to that and certainly looking for that. But it's been enough that it's caught our attention. So if we can't kind of get out of that malaise as we get into the latter winter and early spring, I think that's something that we have to consider. Keep in mind too, from a seasonality perspective, February is the second weakest month historically, persistently, for equities. It's about a 52% probability of a positive return for the month of February, with kind of flattish returns on a median basis and slightly negative on an average basis. So this is the point where if you're going to look for a consolidation or pause in the market just from the calendar, you'd expect that to happen here. So there's a lot of interesting cross currents that are taking place, and I do think it's important. And the street knows this. I mean, I think the street is probably 20-25% attuned to this, but I think there's still room for some inefficiencies to this election that's taking place, the snap election that's taking place in Japan on the 8th. That's a week from this Sunday. And basically you're looking at a candidate who's trying to gain the majority and have what's kind of the equivalent of FDR policies, just continued fiscal spending, try to spend their way out of inflation, which is almost the irony of ironies. And obviously that's had an impact not only on the weakening yen, but it had an impact on the weakening bond market, right? So kind of that crowding out effect, which you have to worry about. Now, the issue will be, and I don't think they intervene between now and then, is there some type of Ministry of Finance intervention? The Bank of Japan does not intervene. The Bank of Japan facilitates the intervention, but the Ministry of Finance makes the call. So I think, it's interesting because historically, when you get into this 150, 160 dollar yen relationship, that's where they start to step up and get uncomfortable. That range is kind of shifted up to 155, 160 now. So it's a little above where we are. But if you have an outcome that is, is perceived as fiscally irresponsible or detrimental to the bond market, you could end up triggering some intervention, and that's going to be a risk-off trade. I mean, people will look at that and start to just because of the funding source start to move capital. So I think it's something. It's a long putt, no doubt about it. I mean, it's probably a 10-15% type of probability, but it can have outsized returns, right? So it's like what they call drawing into a gut straight, right? In a poker table, it's a long shot, but if you can win enough money and you don't have to put up much to win enough money, that probability mismatch makes some sense. So that's one of the things we're looking at in the coming weeks.
Well, you mentioned, our note out to clients this week. I remind everybody that we do a lot more at RenMac than just what is on this pod. So if you're not a client already, go to renmac.com. It'll direct you in the right spot, either as an institutional investor or an individual investor. Become a client, send in a trial request. You can also follow us on our newsletter, which is curated from our social media posts. So we'd love to have you guys see more of what we do here, which is a lot. So thanks for that.
All the money-making stuff is behind the wall, right?
That is right. This is just the fun Friday, podcast.
Yeah. This is Neil's therapy. Our healthcare didn't cover therapy, so we just did this instead.
Because he's always so happy on Fridays. Maybe we should do it Friday afternoon over some cocktails. All right, so we got a week ahead.
Oh my God, can you imagine that? That's like wearing a gun to an ice rally. That's just a bad idea.
Oh boy. I'm going to move on. Well, the very first podcast that you did.
It's legal, but it's just a bad idea.
Right. Your very first podcast you did, remember you had the stirring of the ice in your in the glass. Do you remember that?
Yeah, that's right.
It's a great recording. That's how you opened it.
I thought it was coffee, but that's more appropriate actually. Do you think it was a brown or a clear? What were we?
It has to be clear.
Yeah, if it was the summer, it was clear for sure. Yeah.
All right, the week ahead. Neil, what are you watching?
A couple of things. I mean, I'll be sort of thinking a lot about for our clients, like what would a Warsh chairmanship look like? I mean, one of the things that he's been talking a lot about is that the Fed talks too much. And I think there's some support for that. I mean, I think the Fed does, from time to time over communicate. I generally like more information, not less, but I wouldn't be surprised if, do we get like a refreshing of what the summary of economic projections will look like, what the dots plot looks like? Are we even going to have those things going forward? That's something to think about, for a new chair potentially that thinks the Fed over communicates. In terms of the data, it's going to be a busy week. We get the ISM number to sort of kick things off. The manufacturing data has been a bit mixed in terms of the regional manufacturing, but on net, I would say it's been better. So I'd expect some improvement in ISM. It's possible we get close to 50. Maybe we punch through that. That's what we saw with the Chicago PMI that came out this morning. So that'll be, I think, interesting. I will also get data on job openings and labor turnover. So that's the JOLTS data. Job openings and hiring rates, importantly, are very, very low. And I think, whether we see any changes in around someone's propensity to quit a job or whether companies are more likely to hire, I think that's important. There is some enthusiasm for stability in the labor market. Not necessarily that I don't think things are necessarily recovering. But you could make the argument that to the extent that things were cooling, they're not cooling as much as they had been maybe 6 months ago. And then we'll end the week with the non-farm payroll number. There's nothing in the high frequency data that we monitor that suggests that January is going to be a step up in jobs growth. I mean, it's kind of ho-hum running at about 30 to 50,000 on average. The most important thing I saw with respect to the labor market, frankly, is consumer attitudes in the last week. The Conference Board's labor differential continued to deteriorate as consumers said it's getting more difficult to find a job and jobs are not plentiful. So historically, that's been a reliable sort of leading indicator for the direction of travel for unemployment, and we'll see whether that shows up in the next jobs number.
That's going to be a heck of a podcast next Friday. A lot of fireworks in that one. We got a special guest coming on, and it's Payroll Friday, so that's going to be a lot of fun. Neil's going to be in a really good mood. It's going to be great.
That might be a two-parter. Dang.
Right?
You have to have an intermission.
Pavlik, what are you watching? Hey, by the way, talk about this purge over in China. Are there going to be any more this week?
I don't think there's going to be any more. They've fired most of the generals. I guess things to remember.
Fired's a nice way to say it, by the way.
Yeah, you're probably never going to see them again. So I guess the thing to take away from that is, the U.S. intelligence believes that Xi Jinping wants to have the ability to invade Taiwan by 2027. That's next year. And I don't know how you're going to do that if you're getting rid of all your military leaders, many of which have been accused of graft. I think the most recent one that you might be alluding to is the senior-most general actually being accused of spying for the U.S. So way to go, Team USA. I'm all for it. But do you have a lot of confidence if you're Xi and your military to be able to perform off some amphibious invasion? Or is all the money that you think is going to the military equipment to pursue that really going there if you have these graft concerns? I don't know. Maybe Xi doesn't either. So if you're Taiwan, maybe that's a good thing.
You're running an asset at the highest levels of the Chinese government. That's a win. Wow. Anything else you're watching this week?
Well, that was one of the rare examples of the U.S. government doing something good. I'll give you an example now. The U.S. government, which we're most familiar with, doing something bad, and that's Congress. We're recording this Friday morning. The Senate has not yet agreed to pass a deal to try to avoid a government shutdown. They're not going to be able to avoid the government shutdown, which is expected to take place here at 12:01 on Saturday. So the Senate will try to pass 5 of the remaining 6 appropriations bills. They should be able to do that. That'll get you funded through September 30th. Remember, the Senate had already passed 6 previous to that. And they will remove the Homeland Security portion of the bill and do sort of a 2-week extension to allow more negotiations there. The issue is the House is going to have to come back and pass these. I don't think the House is going to do that before Monday. You have some weather complications that also make that challenging. So again, we will be in a partial government shutdown through Monday. The House could pass the Senate package as early as Monday. Usually in Congress, you take the over. Joe, if it happened maybe Tuesday, again, it's a partial government shutdown. 6 of the appropriations bills have been funded, unlike where we were in the fall. And we're looking at a very short one, probably resolved Monday or Tuesday. So that's the big thing I'm watching in the near term. A little later in the week, I believe Treasury Secretary Bessent is testifying before the House and Senate as part of the Financial Stability Oversight Council. It's an annual testimony. So he'll have a lot of things to say, maybe on the deregulatory space for the banks, the important role that might play in having them try to grow the economy. So that's something else I'm watching for.
Excellent. Jeff?
I wasn't aware of this purge, but keep in mind the Chinese do this to us all the time. I mean, we've got one on our staff right now. I mean, our executive producer is without question a plant. We all know that Harry is. Got to watch him. Got to watch him.
That's right. Well, win one for.
I think that's true.
That's
actually.
his front.
So it's his,
maybe that's going to be a distinction without a difference soon, but for now it's not.
Jeez.
Win one for the China desk at the CIA. There you go.
Exactly. Look, I'm watching the reversion trade, right, and evidence of that, and just want to be really, really careful of these hair triggers that are out there, in these extended names. I'd put semis in that camp. I'd look for that reversion in software. I'd put obviously precious metals in that camp, and then just really interested as to what's going on with the potentials for intervention, right? And you can kind of see these step functions that that authorities take, particularly the Ministry of Finance, historically when they do this. And this wouldn't obviously be the first time that they intervene if they plan to do it. But the first thing is a rate check, right? Which is where the Treasury, U.S. Treasury, and the Bank of Japan go to the dealers, the primary dealers, and ask about spot rates and getting off billions of dollars of currencies. Because you can't just go to the market blindly and do that. So the rate check is kind of there used to be a thing called $2 brokers in the market, and they were kind of sloppy. And if you really wanted to send a message, you'd use a $2 broker because they didn't really want to work orders that much. And so, you could kind of if you wanted to move the market, you'd give a large order to a $2 broker and just kind of watch them it up, frankly, but to your advantage, and that's why you would do it. And so, by rate checking, it's not like they're saying, "Shh, don't tell anybody." I mean, the worst kept secrets are on trading desks, obviously. But when that happened last Friday, so they go about and they get these quote unquote rate checks, and then that starts to buzz around that hey, there might be some intervention coming, and lo and behold, guess what happens? People start covering their shorts in yen because they know that there's a bazooka behind it, and that worked. That's worked for this last week. So we'll start seeing if there are any more of these that take place, kind of what their tolerance is for weaker yen. And again, we're not in that zone right here, right now that I think it requires that to happen, but we're close. And obviously their whispers help to modify or nullify that in the last week. So that's going to be what I'm going to watch next week, just because those are little things that can have a big impact, and that's important.
Well, thanks, Jeff. Let's wrap it there. Again, I'll remind people to go to renmac.com, become a client, full-fledged client, institution, individual. Get on our social media posts. We're on LinkedIn, we're on X, we're on all of them. And we got lots of
big game
great
tonight,
stuff.
Steve.
Big game tonight. There is a big game. I'm going to go with Michigan State basketball. Am I right?
Yeah.
There we go.
You didn't know that?
No,
I don't know.
I don't watch basketball until March Madness.
But you're good, so you could watch
true.
basketball. And then we've got hockey next weekend, so lots of stuff going on.
I bet you go on Kalshi.
Back in the Mitten State.
Can you go on Kalshi and make sports bets? You can, right?
Yeah, but you can also go to FanDuel and do it. Why would you even mess with Kalshi when you can? I guess if there's
when I'm making my bet on Bessent becoming the Fed chair, I'm right there.
All right.
You can do in-game.
Still, look, a man can dream. A man can dream. Typically, fun fact, it takes about 3 months from the time a president nominates somebody to the time they get confirmed. In a situation like this, right? Not when they're renominated by a president, but when they're nominated for the first time. 3 months is an awful lot of time to fill the information vacuum in Washington.
With rumor and innuendo.
I mean, the father-in-law, the hawkishness, the fact that that Governor Carney, governor, he was the governor of Bank of Canada, but governor as in the 51st state, Governor Carney is now coming out in support of this man, of Warsh, Condi Rice, Obama's former CEA chair. I don't know.
It's amazing. We've literally gone full circle.
I would say Neil's olive branch has no leaves on it.
let me know how that dinner and the nice new hall at the Fed is going to be for you. It's going to be fantastic when they invite you in.
All right, Steve, you're going to say something.
I was just going to say.
No, not you. The other one.
Oh, the other
Steve. You're Dut.
What do you got?
I was just going to say DC is the only place where sound travels faster than light, so there may be something to that.
Man, somebody's been in that town way too long.
We will end it there. Thanks everybody for listening. We'll be back next week with that. As I said, a special guest. It's Payroll Friday. Lots of fireworks going on next Friday. Until then, I'm Steve Duttenhofer.
I'm Jeff DeGraff.
I'm depressed, and I'm Neil Dutta.
I'm Steve Pavlik.
Depressed Neil Dutta. I love it. Thanks, everybody.
Later.